Welcome to the deep dive. Today we are unpacking, well, one of the biggest and frankly most frustrating hurdles for anyone new to the U.S.
Oh, absolutely. A huge one.
Establishing credit history. From scratch. I mean, you could be a super successful professional and investor. You could have a top-tier score back home.
Right.
But when you get here, the financial system basically treats you like you're invisible.
That phrase, credit invisible, it just captures the problem perfectly. The sources we looked at all confirm it. A sparkling credit score from, say, Germany or India or Mexico, it just doesn't port over.
It doesn't transfer.
Not at all. When you arrive, you're missing the three things the American system wants: a file with a major credit bureau, a history of on-time payments in the U.S., and usually a Social Security number.
And without that, simple things, I mean, renting an apartment, getting a good rate on a car loan, even just getting your utilities turned on without a massive deposit.
They become immediate roadblocks. The U.S. credit report, it really is your financial resume.
It is. So our mission today is to give you the tools to build that resume, and fast.
We're going to dive into 5 core strategies, things you can actually do. And we'll also tackle the big one: the individual taxpayer identification number, the ITIN, and all the complexities that come with it.
Okay. Before we get into the tactics, let's set expectations. This is our key fact hook. It usually takes at least 6 months of reported activity to even generate your first score.
A minimum of 6 months.
But, and this is the important part, there are ways to make sure that 6-month clock starts ticking as effectively as possible from day one.
Okay, let's start with a blueprint, the strategy. Because if you understand how the score is weighted, you understand the game.
That's right. The FICO score, it ranges from 300 to 850. Lenders, they really start to get interested around 700.
And once you get over that, say, 720, 740 mark,
That's when you get the absolute best interest rates on things like mortgages and car loans.
and the most important thing for a new filer, for someone just starting out, is that you have to focus on the parts you can control right now.
Exactly. The system is weighted, and 2 factors make up 65% of your score right out of the gate.
The biggest one, 35%, is your payment history. This is non-negotiable. Pay your bills on time every single time. It is priority number 1
And right behind that,
at 30% amounts owed, or, what people call credit utilization.
that's the ratio of how much you owe versus how much credit you have available.
Exactly.
The other 35% is stuff that's harder to influence right away. Length of credit history is 15%, new credit is 10, and credit mix is 10.
So if you're new to the country, you can't magically create a long credit history.
No.
So your strategy has to be ruthless control over those top 2, 100% on-time payments, and keeping your utilization rate incredibly low.
People always say under 30%.
And that's okay. But if you want to optimize a brand new thin file, you should be aiming for single digits. Like 1 to 5% is ideal.
Yeah. That is super actionable. The goal is simple. Create a record of being responsible while strategically carrying almost no debt.
Which brings us to the first tactical tool for most people.
Credit cards.
Yep. The most common and honestly effective entry point is the secured credit card.
These are great because they totally minimize the lender's risk. You give them a refundable cash deposit, say $200, $500, and that deposit becomes your credit limit.
So you use like a normal card, you buy things, you pay the bill every month, and they report all that good activity to the credit bureaus. If you don't pay, they just keep your deposit.
And the most important thing to check here is
You have to confirm that the issuer reports to all 3 major bureaus: Experian, TransUnion, and Equifax.
all 3.
If they only report to one, or worse, none at all, you were just wasting your time.
Right. And then after a year, maybe 18 months of good behavior, you get that deposit back and the card graduates to a regular unsecured card. Now, what about skipping that step? We saw some people might qualify for an unsecured card right away.
Absolutely. If you have a relationship with an international bank that also operates in the U.S., that's a great place to start. Or look for cards specifically marketed to people with little history.
Some of the big banks or even retailers might give you a small limit to start.
Yeah, you might get a small line, maybe $1,000, $1,500, just to start that relationship. And the big plus there is you don't have to tie up your own money in a deposit.
Okay, but let's say someone can't afford that deposit or they're just, nervous about getting a credit card. Is there another way?
There is, and it's a really unique tool called a credit builder loan.
You see these a lot at credit unions and community banks.
Right. And it's basically a reverse loan.
Yeah.
So instead of getting money up front, the bank puts a sum, say $1,000, into a locked savings account for you.
And then you make payments to them.
Exactly. You make monthly payments plus a little interest for like 6 to 24 months. Each on-time payment gets reported and builds your credit history.
So you're building credit and you're forced into saving money at the same time.
Precisely. And at the end, the full amount is released to you. It's a fantastic, low-risk way to build a positive history and walk away with a nice little nest egg.
Okay, what about the ultimate shortcut? Can you use the good credit you already built in your home country?
So you can't officially transfer your score. But there are new services, like Nova Credit, that act as a bridge.
A bridge, how so?
They can access your financial data from your home country, from a bank in Mexico, India, Brazil, Australia, wherever, and they translate it into a U.S. equivalent report. They call it a credit passport.
But the U.S. credit bureaus won't look at that, right?
Your bureaus won't, but their partner lenders will. So we're talking about American Express, Chase, PayPal, even some property managers. They use that credit passport report to evaluate your application now so you don't have to wait 6 months to a year to build a U.S. score from scratch.
That's a huge time saver, especially if you're trying to rent an apartment right away.
It's a game changer.
All right, this is where things get really strategic. Using relationships you have here in the U.S., let's talk authorized users versus cosigners.
Two very different things, but both can have a huge impact, and both rely on someone you trust who already has great credit.
Let's start with being an authorized user. This is where a trusted friend or family member adds you to their credit card account.
Right, you get a card with your name on it.
And in theory, you get the benefit of their long history and their low credit utilization. It all shows up on your file.
It sounds like a perfect hack, but what's the catch? I mean, you're tying your financial well-being to someone else's habits. What if they suddenly run up a huge balance?
That's the risk. It hits your report almost immediately. You benefit from their good behavior, but you're totally exposed to their bad behavior.
Even though you aren't legally responsible for the debt.
Exactly. And you have to be picky. Not all banks report authorized user activity. You want to aim for the big ones like American Express or Chase, who are known for reporting it reliably.
Okay, so what about a cosigner? That feels like a much bigger commitment.
It is a much bigger commitment. It's usually for a specific loan, like a car loan, when you can't qualify by yourself. The cosigner is 100% legally and financially on the hook if you default.
They are just as responsible as you are.
Totally. We saw a great story in the sources from a compliance manager who needed a car. Her aunt co-signed the loan. She made every single payment on time for a year.
And just that one account was enough.
It was the foundation for everything. After that 1 year, she started qualifying for her own credit cards and loans. It was a temporary boost that had huge long-term benefits.
And that just shows the power of focus, right? One successfully managed big-ticket item, like a car loan, can build credit faster than, say, 3 small credit cards you're not managing well.
Definitely. Okay, let's switch gears to leveraging expenses you're already paying anyway. I'm talking about rent and utilities.
It's shocking. But traditional rent payments, they are not automatically reported to the credit bureaus.
Even though it's probably your biggest monthly expense when you first arrive.
Exactly. To get credit for it, your landlord or property manager needs to use a third-party reporting service that sends that data to the bureaus.
And there's another tool that builds on that idea, Experian Boost.
Yes. Experian Boost is a feature where you can link your bank account directly to Experian.
And it stands for on-time payments.
It scans for your on-time utility payments, your phone bill, internet, even streaming services, and you opt in to add that positive history directly to your Experian report.
And they've added rent to that now too, right?
They have, as long as it meets certain criteria. You have to have paid it online, have at least 3 payments in the last 6 months. But yes, it's a huge addition.
For someone with a thin file, that seems invaluable. You're getting credit for being responsible with money you're already spending.
It can literally create a reportable file where one didn't exist. And that might be just enough to get you approved for that first secured card.
Okay, it is time. We have to address the centerpiece of this whole challenge, the ITIN. What is the real difference between ITIN acceptance and ITIN functionality?
This is where it gets really complex, and we have to be super precise.
Okay.
An ITIN is just an individual taxpayer identification number. The IRS gives it to people who need to file taxes but aren't eligible for a Social Security number. It always starts with the number 9.
Right, and you have to use it every 3 years to keep it active. That's a key detail.
A very key detail. But here's the good news. Many major lenders, American Express, Capital One, Chase, Citi, Bank of America, will accept an ITN instead of an SSN on the application.
So you can apply, but there are catches.
Always catches. So Bank of America, for example, might make you apply in person at a branch because their online system might just reject the number format.
And some banks just say no.
Some just say no flat out, like Barclays or Discover. Others, like Wells Fargo or U.S. Bank, they might only accept an ITIN for a secured card to start.
So the lender says yes, you get the card. But then what happens when they try to report your good payment history to the bureaus?
That is the core technical problem. The credit bureau's automated systems, they are built around the SSN as the main identifier.
So when they see a number starting with a 9.
The systems at TransUnion and Experian might just auto-reject it, or they can't actually match the data to a file. The ITIN itself isn't used by the bureaus to match files.
Wait, so even if the credit card company is reporting everything perfectly, the bureaus might just lose it or not file it correctly?
It's less reliable, for sure. When creditors report for an ITIN holder, they're told to leave the SSN field blank or use zeros. The bureau then tries to match based on your name, address, date of birth.
Secondary information.
Secondary information which is just not as reliable. This is why ITIN holders often find it's easier to pull their full report from Equifax or maybe a smaller agency like Innovis. Their systems seem to be a bit more flexible.
This sounds tough, but there's a light at the end of the tunnel if you eventually get an SSN.
Yes, and this is critical. The history does not automatically merge.
So what do you do?
You have to proactively contact the bureaus. You send them a formal letter, and there are templates for this online, with copies of your new SSN card, maybe a pay stub, and you ask them to manually associate your new SSN with all the credit history you build under your ITIN.
So you don't lose all that hard work.
Exactly, you have to claim it.
Okay, so once you have these tools working, a secured card, a credit builder loan, you're using your ITIN strategically, it all comes down to management. What are the 3 commandments of building a great score?
We have to circle back to the weights. Commandment 1, pay all your bills on time. All the time, that's 35%.
Done.
Commandment 2, keep your credit utilization low. We said aim for single digits, 5% or less is amazing, but whatever you do not cross that 30% line.
And the 3rd commandment is about applying for new credit.
Yes, be careful. Every time you apply, it's a hard inquiry, which dings your score a little temporarily.
Yep.
And if you open too many new accounts too fast, it lowers the average age of your credit, which is also a negative.
So be strategic. Space out your applications.
Be very strategic.
Before we wrap up, let's talk about scaling up and also what to avoid.
Okay, pitfalls first. Avoid high-interest payday loans at all costs.
They don't build credit.
They do not build credit, and the interest rates are just financially destructive. Also, stay away from credit repair scams that promise to remove accurate negative information. That's illegal, and it doesn't work. Only time and good behavior can fix that.
Okay, on the positive side, once you have a good personal score, how does that help if you're an entrepreneur?
It's vital. When you apply for a small business loan, the lender is always going to look at your personal credit.
Always.
A great place to start is with microloans. These can go up to $50,000, but the average is more like $13,000. And they come from nonprofit community groups like Axion or Kiva, who are often more flexible than big banks.
I thought the Mission Asset Fund's lending circles idea was just genius.
It's a phenomenal program. It's a zero-interest social loan. A small group of people all chip in, say, $100 or $200 a month.
They pool their money.
They pool their money, and each month, one person in the circle gets the whole pot. But the crucial part is that the organization, MAF, reports those regular on-time payments to the credit bureaus for every single person in the circle.
So you're building a perfect payment history with your community without paying any interest.
It's brilliant.
This whole deep dive really shows that, look, the U.S. credit system has a steep learning curve for new arrivals. There's no doubt about
It's
it.
a very steep curve.
But it's not impossible. It just takes patience and a really consistent strategic use of these specific tools we've been talking about.
And that knowledge, that's what gives you real financial power. Once you get these mechanics down, you have leverage, whether you're trying to get a lease, a loan, or, start a business.
Which brings us to a final provocative thought for you to think about. We know that your personal credit is reviewed when you apply for business funding, so consider this. Anyone can set up a business in the U.S., regardless of their legal status, and get a business employer identification number, or an EIN.
Okay.
So, what if you ran two tracks at once? You use ITN accepted products to rigorously build your personal credit file, while at the same time using that business EIN to build a completely separate corporate credit profile. Could that integrated approach accelerate both your personal financial standing and your entrepreneurial goals in parallel? Something to think about.